All right, today we're diving into the marketing tech company Zeta Global. And we're going to look at the full picture, right? We'll see the story they tell investors. And then we'll check out the story they have to tell regulators in their SEC filings. Two very different perspectives. But look, before we get into Zeta specifically, let's just set the stage. Why is marketing so darn hard these days? It's a question that literally every company is wrestling with. I mean, think about it. You've got a million different channels. You're drowning in data. And your boss is constantly asking, what's the ROI on that? It's just chaos. Marketers are finding it tougher than ever to actually connect with people. It's like trying to have a conversation in the middle of a rock concert. The real challenge is finding that signal in all the noise. Okay, so here's how we're going to break this down. First, we'll cover what Zeta Global actually does. Then we'll look at the tailwinds, the good stuff pushing them forward. After that, the headwinds, the potential hurdles. And we'll wrap it all up with the key takeaways. All right, so what exactly is Zeta Global? What's their answer to all this marketing madness? Well, the core of their offering is something called the Zeta Marketing Platform, or ZMP for short. The big idea here is that it's this AI-powered platform that helps big companies acquire, grow, and hang on to their customers. It's all about managing that entire customer journey. And this slide really lays out how it works. It's a three-step process. See, on the left, the platform pulls in a ton of data signals, what you're browsing, what you're buying, all of it. Then, in the middle, the AI gets to work. It chews on all that data to figure out, what a customer is actually likely to do next. And finally, on the right, it uses that intelligence to launch personalized marketing campaigns. We're talking email, social media, even on your smart TV. It's a whole system. So, that's the pitch. But is it actually working? Let's look at the tailwinds, the positive momentum, and see what the numbers from their investor updates tell us. First off, their customer base is growing. They focus on what they call scaled customers. These are the clients spending over $100,000 a year, and they're now up to 567 of them. And what's really important is that this isn't just a one-time thing. This chart shows you the growth over the last few quarters. It's just consistently ticking up. They actually say it's been 17 straight quarters of this kind of growth. That steady climb is exactly the kind of thing that gets Wall Street excited. And it's not just about adding more logos to the list. They're also getting their existing customers to spend more money. The average amount a scaled customer spends with them is now over $500,000 a year. That tells you that once a company starts using the platform, they tend to go deeper and spend more. And that trend gets even more pronounced when you look at their biggest spenders. They call these super scaled customers, the ones dropping over $1 million a year. That group has grown by a pretty healthy margin in the last year. It's a classic land and expand model, and it seems to be working for them. Okay, so that's the sunny side of the story. That's the highlight reel. But to get the full picture, we have to look at the other side. Let's dig into the headwinds, the stuff they're required to tell investors about in their SEC filings. Because, look, no growth story is without its risks. And when a company files its official reports, like the 10Q, they have to lay out all the things that could potentially go wrong. This isn't the marketing pitch. This is the reality check. And here are the big ones they point out. You can kind of group them into a few themes. First, you've got market pressures, right? Intense competition and the challenge of just holding on to those big customers. Then there are the operational risks, things like depending on third-party data centers and the constant threat of security breaches. But honestly, the really big one is their dependence on data. The whole business is built on collecting and using online data, which is a minefield of changing privacy laws. And this quote, straight from their filing, really just says it all. Our success and revenue growth depends on our ability to add and retain scaled customers and convert our scaled customers into super scaled customers. I mean, they're telling you right there. The whole model, the whole growth story we just saw, it all comes down to their ability to keep upselling their clients. If that engine stalls, it's a huge problem. Okay, so we've seen the good news and we've seen the warnings. Let's pull it all together. What are the key takeaways here? What's the real signal in all this noise? It really boils down to this. On the tailwind side, you've got undeniable growth. They're adding high-value customers and getting them to spend more. That's a powerful combination. But on the headwind side, they're operating in a fiercely competitive space and their entire business model is super sensitive to any changes in data privacy laws. Plus, their success is totally dependent on that land and expand strategy we talked about. So it all comes back to this one big question, right? Zeta's whole pitch is that its AI can find the signal in the noise for its customers. But the real test is whether Zeta itself can keep finding its own signal for growth amid all the noise from competitors and regulators. It's a huge challenge. Hey, thanks for tuning into this explainer. If you want more deep dives like this, where we look at the full story, head on over to notyouradvisor.com and hit subscribe. We'll see you next time.